welcome to the Morningstar series Ask the Expert. I'm Emma Wall and I'm joined today by David Holder, Senior Fund Analyst for Morningstar. Hi David.
Hello Emma.
So all this week we've been focused on everything income investing, and today we're going to have a look at those dividend heroes, those investment trusts that have managed to grow their dividend over significant periods of time, decades of time. What's the first trust you'd like to highlight today?
Well, the first trust is the Whitton Investment Trust. This is a globally diversified portfolio. It has around 400 holdings. It's really looking to provide investors with capital, long-term capital growth and growth in the dividends that they receive also. Talking about longevity of dividends, this trust has paid an increasing level of dividends over 40 consecutive years, and so incredibly impressive from that regard. It also has dividend reserves over a couple of years also, which allows the fund manager to smooth the level of dividends that investors receive.
And because it's so diversified, over 400 holdings, it's quite a steady idea. It's the sort of thing that would be suitable for a core of a portfolio.
We believe so, yes. It's very prudently and sensibly managed by Andrew Bell and James Hart, both long-standing and well-regarded investors. It invests through segregated portfolios in specialist areas. And so, yes, indeed, we think it is a really well-diversified portfolio, managed very sensibly, and provides investors with a really good building block for their portfolio.
Quite a low yield, though, isn't it?
Yeah, it is. It's slightly lower yielding than some investments out there, 2.2%, and it's paid quarterly also. But I think it's important to incorporate differing levels of income and diversification of income, rather, within investors' portfolios.
Absolutely. And what's the second trust today?
The second trust is Lowland. Lowland focuses very much on UK equities. It is managed by the very experienced James Henderson, who's managed Lowland since 1990. This has a focus on smaller and mid-cap UK companies. It has an element of gearing also, and so therefore it's slightly higher risk than a standard UK equity fund, if you like. Henderson are very well regarded fund management house. They're very well resourced also, so we feel very comfortable with the Henderson proposition within the UK. The trust is providing a dividend of around 3%, paid quarterly again. It's covered by some decent reserves also, and it's increased every year since 1972, with the exception of 2009 when it was merely maintained. And so, again, a very long record of rising dividend income for investors.
No mean feat over cycles, rallying and indeed bear markets.
Absolutely, and it really plays into the strength of the investment trust structure as well.
And what's the third and final trust?
The final trust I'd like to highlight, Emma, is Murray International. As the name suggests, it's a global investment trust managed by Bruce Stout of Aberdeen. We regard the Aberdeen process very highly, and I think it's very well applied to the income space also. And so Bruce has managed the trust since 2004. It does have a slightly higher risk profile in that it's investing quite materially in Latin America, emerging markets and Asia. And so, we think that over time investors will be rewarded for this exposure to slightly more exotic markets. However, it should be made clear that there is some volatility here, and that investors should be prepared to invest for the longer term, and that this isn't necessarily a core part of investors' overall sort of portfolio.
And what's the yield on that trust?
The trust pays a very healthy dividend yield of 5.4%, again paid quarterly, which I think is very important for investors.
So you've got three very different but very well regarded trusts there.
Yes, I think all three can play a part with investors' portfolios.
David, thank you very much.
Thank you, Emma.
This is Emma Wall for Morningstar. Thank you for watching.